So the Bank of Canada just held its policy rate today at 2.25%. And I want to walk you through what that actually means for homeowner, buyers, and anyone watching the Toronto and the Greater Toronto Area real estate market. Don't worry, I read the full report so you don't have to. My goal today is to translate all the technical part into simple, practical insight you can actually use for your next decision. Whether you're that's buying, selling, renewing, or just planning ahead. So let's break it down. Why did the bank hold the rate? The bank held because the economy is showing more resilient than expected. Q3 GDP surprised on the upside at 2.6%. Yes, some of that was from volatile trade number, but overall, the bank now believe that Canada entered 2025 with more underlying strength than they previously thought. The labor market is stabilizing with unemployment dropping to 6.5% in November. Jobs are not booming, but decline have stopped, and the service sector is carrying most of the gains. Inflation is hovering near target. Headline inflation is around 2.2%. Core inflation is around 2.5%. Not perfect, but close enough that the bank does not feel pressure to cut aggressively. They also expect some temporary bumps because of the last year GST, HST holiday, but beyond that, inflation remains stable. So the message is clear. The bank is not rushing to cut again, but they're also not raising. This whole reflects stability and caution. Now, what does it mean for mortgages? Let's talk about how this directly impacts your borrowing costs. If you are on a variable or adjustable mortgage, there's no change to your payment today. The bank did not signal urgency to cut again soon, but they also left the door open if economy weakens in 2026. Fixed mortgages follow bond yield, not the overnight rate. Bond market are now pricing in the bank that is done hiking, not actively easing, and very focused on US trade risk. So yield may drift down if growth slow, or move up if trade tension escalate. This is why you might see small movement in fixed rate even when Bank of Canada does nothing. The stress tests also remain unchanged, and your qualification improve only if your contract rate come down. Impact on Toronto real estate market. So this whole creates stability, not a sudden surge in demand. In the freehold market, tight supply pocket, Toronto, York, Durham may see steady activity. Move-up buyer generally wait for clarity, not necessarily a cut. So this helped them plan. In the condo market, this segment is still under pressure. Carrying costs remain high for investor and small landlord. A rate hold doesn't fix cash flow. Meaningful relief still depend on future cut or lower 5-year yield. Bigger picture, one hold doesn't unlock spend-up demand. A pattern of steady decision or decline in bond yield is what gets people off the sideline. So, what should you do? If you have a mortgage, here's how to prepare. For variable rates, update your amortization projection under a no more cut scenario. For renewal coming up between 4 to 12 months, secure a rate hold now and reshop if yield move. Prepayment remain one of the most effective tools to reduce interest costs. If you are buying, get pre-approved under today's condition, considering 2 to 3 year term if you want flexibility during the transition period, and stay disciplined. Many sellers have not adjusted to slower fundamental. If you're waiting, short-term yield may soften if market price more risk into growth. Now, know your buy box so you are ready to act when rate or price shift. Now, what to expect next? Keep an eye on inflation. Core need to drift from 2.5 towards 2%. Watch the labor market. If hiring soften again, the bank may ease sooner. Trade development matter too. US tariff and the customer review are the biggest risks. And always keep an eye on bond yields since they drive fixed rate mortgages. The banks see today's economy as a structural transition, not a normal slowdown. If inflation stay anchored and grow cool, more cuts in 2026 are possible. Now, if you want to understand what this means for your mortgage, your renewal timeline, or your neighborhood in the Greater Toronto Area, reach out to me. Every situation is different, and I can help map out a simple, personalized plan so you can make the confident decision, not emotional one. So send me a message, give me a call, and book a time to chat. I'm happy to help.